What's up, family? This is your boy Ivan Hall, the Credit King. Do you know that inquiries aren't a major factor in your credit score? Credit inquiries, in general, do not have a significant impact on your credit score. There are two kinds of inquiries, hard and soft. A soft inquiry is when someone does a credit check on you for reasons other than giving you money. Soft inquiries occur when a utility provider evaluates whether they want a security deposit from you, when credit card issuers pick what sorts of credit cards to sell to you, and when insurance rates are set. Furthermore, when you use a credit monitoring service to check your own credit, it is a soft inquiry. It would be unjust to use these credit queries against your credit score because they do not involve giving you money but nonetheless give essential information about your credit history. Inquiries, according to Experian, will not hurt you unless you have other, more significant, concerns affecting your credit score. Multiple credit inquiries are an unavoidable part of life. For example, if you want to buy a car and want the best auto loan rates, a dealership may participate in rate shopping, which involves sending your information to a number of lenders. Because of this problem, any inquiries about a car loan made within 14 days will be treated as a single inquiry. Furthermore, there are credit scoring systems that will not count a credit inquiry that is more than a year old. As previously stated, hard inquiries will be removed from your credit report after 2 years. As a result, each individual query becomes less important over time. Looking further into the numbers, new queries only account for 10% of your credit score in terms of effect. To calculate your FICO score, credit scoring models consider a number of broader criteria. Your payment history is one aspect that accounts for 35% of your credit score. This aspect finds how dependent you are on paying back the money you owe, such as if you have previously failed to pay your debts on time or are now behind on any current payments. Another consideration is the amount of debt you have. This component is responsible for all of your loans. The more debt you have, particularly when compared to your salary, the worse your credit score. Finally, your debt accounts for 30% of your credit score. The duration of your credit history is also important. If you repay your loans and credit cards on time, the longer your credit history, the more likely it is that you have good credit. Your credit duration eventually accounts for 15% of your credit score. Similarly, having a diverse variety of credit helps improve your credit score. Having a long history of paid-off credit cards is preferable to having no credit cards. However, your extensive credit history may harm your credit score if you never pay off your credit cards. For more credit tips, credit hacks, and credit repair secrets, subscribe to our YouTube channel or visit us online at thecreditking.com.